You're watching Dukascopy TV. I'm Elaine Stenson. I'm joined in the studio now by our regular guest, independent market strategist Bruno Estier. He's here for a look at the technical analysis of the markets. Bruno, you're very welcome.
Good morning. 2
weeks ago, there was a sense of panic in the markets. What's happened since?
Well, it happened about what we expected. As we can see, 2 weeks ago, the volatility or the measure of VIX was around 21%, yes. And that was close to the 3 previous highs in 2013. And if, as previously it happened, volatility reached an extreme and then it moved back down while the S&P moved up.
And what has happened to Europe and Japan?
Well, during the last 2 weeks, it was even better for Europe. As we can see here, we have a ratio of most stocks divided by the S&P 500, most stocks of Europe, 350 shares. And we see that it is rising recently in the last 2 weeks. So European stocks have been outperforming the US market. And on the Japanese side, it has been a bit more slow. It took some time to really react. Only this morning we had a 3% uprise, which was significant. And therefore, for the Japanese market, we expect the coming rest of the year to be more bound by a wide range between 16,000 and 14,000.
Bruno, how far can the US market rise?
Well, when we look at the weekly charts, here we see on the down part the momentum which is just crossing up. That means that on the price side here we have a lot of potential up, probably toward 1950. However, we are close now to the previous high, which is 1850. And when we looked at the daily charts, we noticed that this rise which occurred in the last 2 weeks has been very steep, almost a straight line. A bit faster even than on the way down, and therefore it is not clear that we are going to be able to break this 1850 right away. Probably we might consolidate a little bit, and then later on in late March, April, we will move above 1850.
Now, Bruno, you wanted to review the gold chart.
Yes, because when everything is moving smoothly up, even the gold is moving up and making a very nice rise in the last 2 weeks. One could say that there is absolutely no problem. However, we need to notice 2 things. First of all, we have reached above the 50% level around 1310 on gold, and the next resistance is probably 1340 before 1360 can be reached. However, we need also to look at something with a little more perspective, and this is the weekly chart of gold. In this weekly chart of gold, we have been, of course, since the end of December, seeing a bottoming phase and then new highs recently in the last 2 weeks. However, this price of gold is reaching an interesting level. This level is the upper Bollinger Band, which is in red here, and it's also the level of the cloud, which is this big rosa area, and it's also the descending trend line, and all of that shows up at 1345. As the momentum is also overbought, here we need probably to expect some trading range and some kind of a ceiling, and this ceiling is effectively capping the gold market. Then we should see a move back toward 1850, 1860, or 1260, 1250. That's why, even though everything looks rosy right now, it's probably a time to look and review the gold chart on a more regular basis.
So would you say at this stage that there's nothing to worry about?
Well, there is nothing to worry. When everything is fine, it's probably that everybody is taking short-term the same position. So probably it's a long position on the equity market, long position on the gold market. And what we need to watch is the first sign of reversal.
Okay, Bruno, great to have you in the studio as always.
You're welcome.
And that's all we have time for now, but do check back later for further updates and interviews from the TV team. Bye for now.